Hello, Mike here. I'm selling a couple positions and putting a bit of a hedge on. I don't think the stock market's going to crash. I don't think we're going into a bear market. But I do think when you get a giant rally like we've seen, at some point you've got to expect a correction to happen. You've got to use times like this to take a little bit of money off the table. And you want to be in a position so that one day when the market does correct, you're not panicking, but instead you're able to buy. But to be able to get in that position, you probably need to, at least I've got to lighten up a little bit. And that's what I'm doing today. I just sold 3 positions. Well, I'll just show you. ISNPY is one I sold. I bought it here, and so I got a little bit of a gain on it. I sold Portolio Telecom, which I bought back here. I made money off dividends, but it's lagging a bit. And I just want to take some money off the table. So I said, well, I'm taking X amount of dollars off. So here are 3 positions I'm doing that with. And then I also bought this one, which I've got a loss on. And I bought it here. And that's what I tend to do. I've got most of my businesses, you got big gains, but a few I got losses. And I like to sell the ones I'm not making as much money on and keep my big winners. So for instance, GREK, which I bought way back here, I'm not worried about it turning into a loss, so I can ride that out. It's already pulled back already, so I don't even know how much it's going to pull back. And my biggest concern isn't so much gold now or European markets or anywhere except it's the United States, the S&P 500. Today's Investors Intelligence report showed that the number of bulls has reached 55%. Turn on your television set and you'll hear nothing but bullish commentary. Virtually every single email I'm getting is from people bullish. They want to know what to buy. And people, I've talked about this last week when it came to gold. No one's interested in gold anymore. They're bearish if they have an opinion, and everyone is now obsessed with the stock market. In fact, over the weekend, I was with some relatives of mine that were telling me they got CDs due, and they want to put it into the United States stock market because now they think it's time to do it. And I think that's the type of mentality going on now. And that doesn't mean we're about to enter in a bear market, but look at this chart, okay? When a market has run up this much, this quick, I don't think that's a good time to be buying. I think that's time when you are invested already and got profits and so forth, that's time to take some of them. And that's what I'm doing. And if we look at previous big advances like this, what you can expect, I think, at some point is for the market to peak out and have some sort of correction. It could fall 10% and be no big deal. It could fall 5%. It could fall 15%. And none of them would necessarily mean the end of this bull market. And I don't think it would, actually. We can go back and see that in 2006 we had a big run up like we're seeing now, and the market pulled back and went higher. In 2010 into 2011 the same thing happened. In 2011 it happened again. 2009 it happened. But after all those advances, like we're seeing now, advances at this rate, this quick, you get some sort of pause and pullback. In 2010 the market went sideways for a few months, then had a correction. And even in 1998 we saw a giant rally, and then a pullback, and then a move higher into 99. I'm just saying that after we've seen the market advance this much, and you got 55% of the people polled by Investors Intelligence bullish, you had the put-to-call ratio hit an extremely low level yesterday, turn on your TV and everyone's saying now is the time to buy, I think that's time when you just want to lighten up. So I did it by selling 3 positions and then going long the SDS ETF, which trades opposite the S&P 500. So the S&P 500 pulls back, SDS will go up, and I paid $38.15 for that. And I think it could go up to 42 to 45, and if it does, I'll probably get out. I'm just using this as a hedge on my other positions. If the S&P 500 does drop, this position will go up and will make up for some of the losses I'm experiencing, and it's an ultra short position. So $38.15 times, let's just say quickly, how much money do I have in this? $38 times 3,000 is $114,000 times 2 because it's an ultra ETF. So I'm basically short now $228,000, which is a hedge on my other position. So I'm like, a little bit of 20% invested in the stock market now instead of 90% invested today when the day began. I haven't sold any of my gold stock positions, and I don't know what's going to happen now with gold because I still believe that with this crash, it's probably disconnected from the stock market. It may not fall, even if the S&P 500 falls. Most likely, I think gold is just going to go sideways, then turn up, in July, August, and go into a new bull market. If we look at world markets, they haven't gone up. The world markets as a whole have not gone up as much as the U.S. stock market has, so they're not likely to pull back as much either. In fact, the last time we saw much of a pullback in the United States was in December during that fiscal cliff period, and world markets actually went up during that time frame. So I'm looking at basically the 50-day moving average as support for GWL, which is an ETF which tracks world markets. That's not that far away. And you can see individual world markets like Italy, for example, they could fall down. It could fall to a point. It's not that big of a deal. That's basically what I'm looking at. A drop to the 50-day moving average seems likely. It's not that much of a move for most markets. However, the United States stock market now is so overextended that some sort of pullback is likely. I think it could easily give back all the gains it made this month, and that'd be fine. That'd be a normal drop after such a straight-up move like we've seen, and it's going to shake up those that got in late to the game, those that bought into a top out of fear of missing out, those that bought on margin. Those people, those type of players will get crushed in any sort of pullback, and that's what causes pullbacks to happen. But those that bought, in the fall or even in January or February even, they can ride things out. They're not going to get shaken out. But it's the late game players that cause corrections, and those are the type of people that can cause selling to happen in this market. And frankly, they're the type of people that scare me right now. When those type of players start to dominate the market action, and when everyone and they cause the bullish readings to get outrageous like they're doing now, that makes me want to take money off the table. That makes me want to put a partial hedge on my other positions. And that's what I'm doing today. And if I'm wrong, and the market continues higher, that's fine. I'll take my partial hedge off and continue, riding things out. But this is the first time I've hedged my positions ever since I got in last July into the market, starting to reinvest with Europe and elsewhere. And before then, I basically was out of the market for a long time, just took a break away from the stock market. So that's where I'm at now. By doing these actions today, I'm putting myself in a position where that if the market does correct at some point, I'm not going to get shaken out by it. I'm not going to be in a panic. I'm not going to be forced to sell on the lows of a correction because I bought in at the top or I'm on margin or something like that. No, I'm going to be a straight-laced thinker, and if a correction does come, I'll be in a position to get rid of this hedge I got, and I'll be in a position to buy and take advantage of things. And that's how you make money in the stock market. Not by buying when everyone else is bullish, not when people on TV put pressure on you and make you feel like you're missing out on things, but by being level-headed and just looking at things in a logical manner. And look at this. The S&P 500 has gone from 1,400 to at this moment it's around 1670, got up to 1690 today. So, big moves like that lead to the momentum's going to slow down. We're probably going to correct. How much will we correct? Let's look back at the S&P 500. Again, I think 1,600 for the S&P 500, wouldn't surprise me. And the thing why I'm taking this action today is something like a reversal day where the stock market went up, the Dow is up over 100 points, and now is about even, and the S&P 500 is in the red. And when that happens after the market goes up day after day after day after day, often that's how tops are put in. We'll have to see what happens tomorrow, what happens going forward. Most likely, if a top has been put in, it'll play out something like we saw last September. We'll see the market, not do much next couple of days and slowly grind lower for, 6 to 8 weeks and hit the 50-day moving average. That's what I would look for. And then, I think actually what would probably happen after the correction is I think we'll see momentum shift outside the United States and into the more cheaply valued markets in Europe and overseas, and probably also into gold and commodities. So how will correction affect everything else? I think everything else pretty much hold up. Gold and commodities may retest their lows, may make slight lows, but I wouldn't expect them to crash. And once the correction plays out, I think we'll see leadership shift outside of the S&P 500, outside of the things that everyone is super bullish on now, and into these other markets, into gold and commodities, which, if they can consolidate and continue building a base after the crash they've had last month, they'll be in a position to lead for the rest of the year. So that's what I'm doing. That's what I've done today. And we'll be following the situation closely with you as we go forward. But today, I'm taking some money off the table and I'm putting on a hedge because the wild, dramatic action we've seen in this stock market the past few weeks has become overextended, while everyone that you practically know has gotten extremely bullish on the stock market. And that's reached an extreme position, and extremes in the market, extremes in sentiment get worked off, and they get worked off in a bull market with a short-term correction. So I think it's going to happen sometime soon. If not today, then at any moment. So that's what I've got to tell you today, and we'll be talking to you later.